Hello and welcome to another Forex Friday. Woo! Let's just jump straight into it. Gonna start things off with the DXY. Oh yeah, we got the, where'd it go? We got the Deadpool mouse because is this market dead? Is it alive? Who the fuck knows?
Totally.
But anyway, let's just go ahead and get started. So let's jump to the daily chart actually. So pretty clear. This is an uptrend. Now people have been talking about a potential blow off top recently. Peaking at around this level of 114. As you can see though, we are back up in this 113, 112 range after bouncing off of 110. I mean, generally when you see a trend this strong, you don't want to fight it, but eventually the dollar is going to peak. I talked about, I think a couple weeks ago, how I think it's, I don't know, I think longer term it maybe could go higher just because all these other fiat currencies are looking terrible.
Little bitch.
But at the same time, the world can't really withstand the DXY or the dollar going that much higher, so eventually it's going to have to slow down. Otherwise, something's going to break, and we already have the gilt market in the UK breaking, and there's probably going to be more things like that to come. Aww. But anyway, I digress. So, this right here is kind of in a little no man's land, I guess, just because we're near the high, not near the bottom, or more or less in the middle of this range right here. So this is the range right now. Again, this is daily chart, so this is a meaningful range right here that we'll be looking for, like some type of bounce or deviation from above or below. But let's drop down to the 4 hour, see if we can find anything. So whenever you're dealing with a range, the obvious initial thing to look for is just the bottom and tops, whether or not you see some sort of area of supply demand imbalance that you can expect price potentially to bounce off of. We don't have anything crazy, but just in general you'd have this area right here. Change this to a supply zone so everybody knows. Oops, there we go. Okay, so we're kind of in this area right here. You can see we're reaching some resistance, maybe, and we got candle wicks here. So there is, at least it seems on its face, some liquidity entering the market to push it down, and it brought us down to this midpoint. Now, what I would be looking for is, and we already kind of reclaimed it, so maybe a retest of this midpoint before retesting or even pushing beyond the range high one more time. Whoops. Or possibly, if we can't hold this, break below and retest that midpoint to head down into this area of demand or the lower end of the range. And I would be eyeing this level specifically just because this is the short-term swing low. So if we break below this, make a new low, then I would be looking for some sort of retest of this midpoint for confirmation that we're headed to the bottom end of this range. And again, that doesn't necessarily mean that the overall dollar uptrend has ended. It still could easily dip all the way down into this area of demand and then make a new high. I mean, as you can see, we have this pretty clear, I mean, it's a 4 hour chart, so not necessarily as meaningful as a daily demand zone, although still, yeah, you can still see it on the daily. So you have this big green candle, a little bit of an imbalance left in this area right here that we could see filled. And what I like about that is it's confluent with this previous range right here. Oops. Let me go to this RSI. This previous range right here, right? So this previous high. So we establish a new range. Now we come back in to retest that area or that range, pull any excess liquidity orders, and then continue the uptrend. So I think this level in general from a higher time frame perspective is a good place to look for, and it would be a decent risk to reward. So if we go long right here, somewhere in the middle of this zone, invalidation just below the demand zone, and just target a new high. I mean, that's already 8R, so I'd probably give myself even more of a cushion, maybe move the entry up a little bit to about 4 or something like that, whatever you want to do. But I think this is a good area to watch the DXY. And if you see other pairs like Euro USD or, USD pairs lining up with this area while, say they're lining up themselves in some sort of demand supply or whatever previous range, at the same time, the DXY is in this area, that could be a good confluence, an indication that we are headed higher to continue this overall trend. But yeah, it's hard to say if this is a blow off top. It maybe looks like it just because we had some pretty aggressive sell candles afterwards, but we recovered pretty quickly and reclaimed the midpoint of this range. So definitely seems like we have some gas left. And again, short term, I would want to see some sort of confirmation we're going to stay above this midpoint. I think once we get a few more candle closes above here, not necessarily daily, maybe even just like 4 hour, a few more candle closes above this level after like a retest of the actual midpoint, then there is a good chance that we would just continue higher to test the upper end of this range again. Yep. All right, well, let's move on to our next pair. All right, so this is the Aussie dollar. All right, let's go daily chart. Like most USD pairs, been absolutely wrecked by the dollar wrecking ball. So clear downtrend. We have this previous range right here, and then this other lower time frame range that you can see down in the 4 hour, roughly this area. So we had a deviation down here, pushed back up to the previous range. That slight little deviation with the wicks. Probably can see it on the lower time frames, which I might go down to. And then just complete crash back down below this range. I mean, we'd even, whoops, make this a little wider.
That's what she said.
So if you consider this the range, you know, we're still operating within it, especially based off this low, these candle lows. So risk to reward around ranges, I always like to look to that, just because if you're playing some low, like basically this order right here, I mean, this is a little high, but just playing the range. So if you're just playing the range, basically similar to what I was just talking about the DXY, you wait for some sort of deviation below the range, like that one right there, these wicks, and then you wait for some sort of reclaim, and then come back, confirm the close above this range area, and then you can maybe mark it in, just try to ride it to the midpoint or the range. So this would be the midpoint being target 1, and then the range high being target 2. So actually, let's drop down to a lower time frame, go to the 1 hour chart. So I wouldn't be surprised if we still see this go a little bit lower, maybe even make a new low. It doesn't really matter. You just have to be patient, because I would wait for the reclaiming of this level. You don't want to catch the falling knife and just wait for, or just, you know, mark it or limit in somewhere here when it's very possible it just continues to tear down. So you want to wait for some sort of confirmation. Even if it breaks below, you let it figure out, consolidate, or maybe these turn into some sort of wick, and then it comes back up into this area, retests, and then pushes a little bit higher. Then maybe you could get in on one more retest, or just mark it in from there, and then et cetera, et cetera. My man! But in general, longer term, wouldn't be holding any of these pairs. I think this is more of a trader's market, unless you're just long-term holding something like Usdjpy, which I'll get to. What is that? It's a few away. You know, let's just switch it up though. Let's go to Euro USD now. More exciting. All right, back to the daily chart. Now, the threat for a lot of these USD pairs, just because it is kind of the consensus trade to be short, and, you know, long dollar, short whatever pair it may be, is very susceptible to short squeezes. And I would say that's usually what these big moves are. You know, you have everyone caught short, and then you get some short covering that leads to these massive impulses into demand. And actually, this is a pretty good example recently where you see these zone shifts. So if you're just doing some sort of basic supply and demand strategy, I like to look to zone shifts. Not always, but sometimes it just makes sense, because, I mean, as you can see, this is a good example where you have this high, you make a low, and then instead of making a lower high based off of the supply built by this high or low, you have this impulse down that leads to some consolidation, followed by a second impulse, and then this becomes the new supply zone, kind of the higher low that this. Oh wait, higher high. I have higher low here. Fucking idiot.
You're a fucking idiot.
Yeah, this lower high is what it's supposed to be. And then you get to this lower high here, but this ends up being the supply zone, or the higher low off of which price pivots and then continues this downtrend. And this happened twice already. So we had this zone shift here, this consolidation that led to another impulse. Price came back in perfectly, didn't make any high off of this wick right here. So this was the the lower high, and then this was the lower high after that. Got really close, but didn't quite do it, and then made this lower low, and then that came back into this area. So we had this drop, consolidation, drop, and this became the new supply zone where price entered and then continued its downtrend. So that just, I mean, I wouldn't expect that necessarily to happen this time. The equivalent would be this area right here, although this is not exactly the same, because you can tell for these previous zone shifts, there's a little bit more of a consolidation right here, kind of the market getting more comfortable with that price and then dropping. So this short-lived retracement I wouldn't hold with the same conviction as these previous ones. So I'd probably be looking maybe to play a short off of, let's just move this up, a short with your invalidation, maybe based off of this high, just to play it safe. In general, basing it off of the actual lower high, it generally, it's just safer way to go about it.
Right.
But again, just eventually targeting the lows, just because it's consistent with the overall trend. You're expecting to make a lower low, so just looking for a potential retracement of Euro USD into, like I said, maybe this level, kind of a zone shift similar to these previous ones right here, that 1, 2. But I would also be looking for some sort of pull from this area right here. And so you can have your stop like that, the clear invalidation by this, off of this high, and just move your entry accordingly, whichever makes your risk to reward appropriate, or whatever works for you. But that is this general area right here I would be looking for. Now I suppose it's possible that we start making higher highs just because the euro has been beaten down so much in the medium term, but still longer term, I think eventually this trend is going to hold up. But who knows, maybe we get some sort of rally up into this level to pull liquidity from these previous lower highs, but who knows.
Totally.
All right, let's drop down a little bit lower. Okay, so lower time frame, 1 hour, we have this this range right here, right? And we get a lot of these deviations and then returns to the midpoint. This right here is a good example of why you have your first target oftentimes being the midpoint. You see some sort of deviation, price closes below, and you wait for some sort of retest or confirmation that this range is going to hold. So you basically are just looking for a deviation, and then you're waiting for some sort of retest. And this actually would have been perfect. So after you saw price go above here, still testing this range, but eventually you broke below this low, kind of confirming this downtrend, went to the midpoint, came back up to retest this range high. So basically you would have your entry here, your stop invalidation at the previous high, so entry there. And I don't think this would be a good risk to reward, so I probably wouldn't have taken this trade, but still you get an idea of how this works. I mean, sometimes if the deviation isn't as far, say your stop would be like over here, then it starts becoming a good risk to reward. But this is the general idea of what you'd be looking for in these deviation style trades.
My man.
And same with something like this. So you see this deviation below this 1 hour range. Let me get the marker. So below this 1 hour range, you have this deviation, right? And then price comes back up, and we actually drop down to a lower time frame right here. So this always doesn't work because this isn't a lot of confirmation. I suppose you could still play this, but you have this deviation right here, and you come back up, and then you retest it and just shoot straight up to the range high. Now you could play off of that. This actually doesn't look like kind of similar to the other one, not the best risk to reward, especially if you're trying to play off of this invalidation. I suppose if you played the range high, it's not completely terrible. I mean, 2 is not ideal at all, but still, I guess, doable. But still, we're focusing on the ideas here. Just some sort of deviation play from the range, confirmation that it is going back into the range, because once you have that, you can have your targets be the midpoint and the range high, because very frequently that is what price does, right?
Yeah.
Okay, that's enough Euro USD. Let's transition to Euro GBP. Okay, so actually I'm going to hop to the 3-day because I think I have an even higher time frame perspective on this one. So with the recent move in the British pound, we had this massive capitulation, and it looked like a huge spike. I mean, you can tell this is just crazy wick. It was just kind of this one-off event or one day where it spiked crazy high and then immediately just cascaded back down. And whenever you see these kind of like spikes and huge moves and reversals, that usually is the sign of a major market top or bottom. It's like a blow off top, blow off bottom, whatever you want to call it. But if we look at the 3-day chart, you can see this is still operating within this larger range. You have this range low. Whoops. You have this range low and this range high. General areas, and that's where we wicked into right here. So we had this candle wick that went straight to the range high, and then so deviation basically, and then a return back all the way to the middle. So I suppose if you were like looking at this and you had an order set in already, you could have had something, something like this set up. Hard to say where you would have your stop in this case. I usually shoot for at least 3R, so I maybe would have got lucky if I had that in. But here, let's get this out of here. But yeah, so we made it all the way back to the midpoint, and but we're still in this range. So what I'll be looking for is some sort of retest of this midpoint or reclaiming of the midpoint. So say we have a green candle right now. Say we push above, come back down toward this midpoint, and I think you can see on a lower time frame. Maybe this is based on 3-day. Yeah, so basically this is kind of like a demand zone, or at least a liquidity zone right here. So I would love to see price go one way or the other, find strength in this area of liquidity, this red zone right here, and then push higher, maybe towards the range high. Although I don't think that necessarily would be the case, just given this this right here potentially signaling a blow off top. So maybe what we would see is just a push back into this level where we find resistance and then continue down possibly to this higher time frame demand zone, or even to the range low.
Yep.
So let's drop down to the 4-hour, maybe get a better idea. All these drawings look terrible. Oh my goodness. Actually, let's go to the daily real quick. Okay, so if you look at the 3-day, you can see this is the impulse, right? So this is kind of where you get the idea of this liquidity zone. And I love that it is confluent with the center point of this, the midpoint of this larger trend. So that is the idea of the zone, like I mentioned. And it kind of lines up on this lower time frame with this whole area of liquidity. And you can tell just this general region is where we get a lot of maybe indecision, balance in market. And then we had this break down below to a new low, huge impulse, left a lot of imbalance. So you could say that is what we're doing right now with price. We're refilling this imbalance up to this level, generally like right over here. And this lower time frame, kind of 4-hour supply zone within this larger 3-day supply zone, I think is a good level to watch for a potential shorting opportunity. And again, I would just be looking for price to dip into here, push back down, not only to make a lower low in this lower time frame, but all the way down to this higher time frame demand zone that you can see again at this 3-day chart right around here, or the range low. So that is what this order right here is. Doesn't all look the best on the 3-day chart, but you can just get the context of the take profit level. So just looking for some sort of retest consistent with this midpoint and this overall area of liquidity that you can see a little bit better when you're on lower time frames. But again, it is consistent with the higher time frame, which is key. So always start top down, basically.
That's what she said.
You have your higher time frame, you move down to like 3-day, a day, even a week, whatever it is, and you just move down the time frames and you find this zone right here, this 4-hour supply zone that's within this 3-day supply zone and clear area of liquidity. We had this impulse down to create this 4-hour supply, and we're now retracing, looking like we're filling a lot of this imbalance. So again, just looking for some sort of reversal in this area and then a continuation all the way to this higher time frame demand.
My man.
All right, moving on. Usdjpy. Okay, so let's go to the daily chart. Again, clear uptrend. We made a low here, pretty, I guess it's pretty consistent with this one, kind of, with these wicks. So clear low, the market gets down to this actual low and then closes much higher. So clear demand in this level, and this level right here. And we're now pushing higher to what looks like could be eventually a higher high. And again, that is consistent with the trend. So while you certainly can look for sells in this level, maybe if you think this is the top and then pushing down to make a lower low, it is a good risk to reward. And on the off chance you're right, it might be worth taking just because you only have to rewrite a few times with that kind of risk to reward. Let me see what it'd actually be, especially because you'd be taking it from this level, not the low of that zone. So you don't think it's going to make a high, and you think we're going to eventually make a new lower low because this trend is reversing. So this is a good risk to reward, and with a almost 6R trade, you have to be right like 5% of the time or whatever it is. I don't know the actual math.
You're a fucking idiot.
But you don't have to be right very much for that to be a profitable trade in the long run, or I guess profitable strategy. Still, I don't know if I would want to be shorting it just given this trend is up, but what I would be looking for is some sort of kind of deviation play, I guess. So you push up, you make a higher high, right? And maybe we consolidate up here, but it's probably not going to be an aggressive high unless we get some news, I would say, out of from the Ministry of Finance in Japan, because you never know. There could be some big move about Kuroda announcing something with QE or interest rates or who knows. And that could lead to some huge spike one way or the other. It's kind of the danger of currency markets these days just because of all the wildness that's going on.
Yep.
But so I would expect a higher high. It's my base case, I suppose. But at some point, there's going to be a higher high, and then we push down to an area of demand. So potentially this area right here. So basically, I would be looking for in the short term this counter trend trade. And I'm not going to again catch a rising knife. Is that a phrase? Up into whatever the higher high is. But I would be looking for some sort of high and then a deviation right above this level, a deviation, and then a return below this high and some sort of retest of this level with your invalidation being whatever that high is, and then just targeting this area of demand. Now, that drawing looks terrible. Hopefully you can understand what the fuck I'm talking about. But let me actually get rid of some of this, make it a little bit more clear. Whoops. Oh, yeah, we don't need you. Get out of here.
And we say bye-bye.
Okay. Yeah, so just to, maybe if I go down to a lower time frame, it'll make more sense. Yeah, so this looks a little cleaner. So basically just looking for, there we go, a deviation. Wherever this high ends up being, that's ultimately where your stop or your invalidation level would be. But you want to see that higher high put in and then a return below this previous high. So you have your deviation, and then you come down here and you look for some lower high, short-term counter trend, lower high, finding resistance at this level. And then once you see it kind of rejecting, getting a lot of or maybe a few candle closes below this level, then you could either mark it in or wait for some final retest. And again, just having something like this and then target whatever your level is. I think if this is the low and we're still in this uptrend, you're not going to trade below this level. So it would probably catch a bid somewhere in this general area of demand. This larger area. You can go on lower time frames like this right here. Looks like a lower time frame area of demand. But in this general region, you could be looking for some sort of take profit, because that's potentially where price would make that high, retrace to, and then continue the trend to make another higher high. So again, keep in mind this is a counter trend view, but when you're in a secular uptrend like this, on the 3-day weekly chart, you can still have pretty long, like a full week of counter trend opportunities. So it's not necessarily a bad idea to do. But yeah, those are my thoughts right now on Usdjpy.
My man.
So let's transition. What is this? So this is Euro Swiss Franc, and we got this range, 3-day range right here, right? So I already have this kind of mapped out. Again, looking for a deviation play and a push basically up beyond this, grab liquidity from busting any stops over here, basically get any liquidity on this side, and then pushing below and, basically sound like a broken record, but like some sort of retest showing that this deviation was in fact just a deviation, coming back, let me get rid of this. Yeah, so showing that this was in fact the deviation, and then coming back in below that high, maybe retesting it, and then coming back down and shooting towards the target 1 midpoint, target 2 the range low. And this one you could feel more confident targeting the range low, just given that it is a longer or higher time frame downtrend. So the expectation would be that we are going to make some sort of lower low right here, so break below this level at some point. It's just a matter of finding out when that reversal is. And some people might be playing this as a supply zone play, which definitely could be the case. I would be watching out for that. We're pretty much in that territory right now. So if this is the high, right, this is the high that led to this low. So this high led to this low. So presumably, consistent with structure and like a supply demand approach, you would be coming into this area, and we already kind of did dip below, and now we're in it again. So who knows, maybe we do just drop from here down to make that lower low. That's totally possible.
Totally.
But I think we could also see some deviation play. Basically like this. So once you see the deviation, that could be enough just to pull the liquidity, the sell side liquidity, and then just drop down. But I would still be waiting to make sure that that is the high, because who knows, maybe we break above, we find support around this area, and we kind of consolidate around and then push higher. And maybe you just get stopped out, who knows. But you just want to make sure that you're waiting for some sort of confirmation that the deviation is in fact a deviation, not like this trend break and continuation. Even if it is a new trend, oftentimes you see these deviations and then you pull all the way down into this area of demand and then push higher to a higher high. So even if it is a new, like a break of trend where we're starting to make higher highs and higher lows, you could still play this deviation play all the way down to this area demand, or maybe it ends up being this area demand. Doesn't really matter. Still be a good risk to reward opportunity. I guess depending on where the high is, it always depends, because that's roughly where your invalidation level will be. But you can have your stop right there, entry somewhere along the lines of the range high once you demonstrate that it's turned resistance basically, and then targeting midpoint. Jesus Christ. Targeting the midpoint, about a 3-hour trade, not crazy, or the range or the demand right here. But like I said, we're in a larger or higher time frame downtrend, so definitely feel comfortable targeting the lower low, which is a much better risk to reward. Anyway, I digress. We got anything significant on the lower time frame? Yeah, so in a nutshell, basically just watching this area supply, see if price will trade above this high. If not, that means this is definitely the supply off of which we'd pull liquidity and head to make a lower low, I would assume. Otherwise, I would be looking for this deviation play and then a push below, and then some sort of retracement into, even up to here. As long as we get a decent amount of candle closes below this level, or it's just pretty clear that this is not necessarily functioning as support, I would potentially feel comfortable taking a sell off at this level or higher, as long as we don't trade past that high, right? Because that's the invalidation, hence the stop. But we could trade all the way up to here, and it would still, be a valid trade, right?
Yep.
Okay, transitioning. Gbp USD. Okay, so now this has been interesting, just because there's a lot of craziness going on with the UK, and just little news events can lead to a lot of short covering, just because in general, like a lot of these USD pairs, people are net short by a large margin. So you get these periodic spurts of short covering that lead to like little rallies. Potentially that could have been what caused this, or what caused this, because you have the UK dealing with the bond market, pension fund crisis right now, and there's like news events coming out every day that can move the market or motivate people to short cover. So who knows? This is definitely a trickier market to navigate these days, just because of everything going on in the UK. But in general, I would say bearish overall, just because the UK is going through some wild shit, and relative to the dollar, the Fed is still raising interest rates. The UK already switched basically to QE, to backstop the pension funds. So I really don't think that longer term it is going to gain against the dollar, or even the medium term. I think, again, like we could see some short covering and like some pushes into these levels or something. But longer term, I think we will be maybe not lower low, but at least like range bound and headed lower to the bottom end of this range. That is, again, my base case. So we'll see how this works out. We didn't make a higher high here, so this is still potentially just kind of part of, like, you know, just a little counter trend, part of this larger downtrend back towards the range low, where, whoops, who knows, maybe we just do some of this until we catch a higher low and then a continuation. But I still think sooner rather than later we will trade into one of these levels before making a higher high, but obviously could be wrong. I think this is actually a trade I was in right now, and by the skin of my ass I'm still in it. It wasn't I definitely did low exposure just because I wasn't, I know, I sometimes I experiment with different strategies, and so I didn't, you know, if I'm doing an experimental strategy, I'm not going to do the same size, which I would highly recommend. I mean, when you're experimenting, the whole idea is learning, so you don't want to just be having like $1,000 on the line or whatever it may be, you know.
Totally.
But yeah, so actually maybe I'll describe that. So this is a golden fib strategy that I got from someone on what was it called? Trading Nut. Yeah. And it's not, I mean, I feel like it's good as a confluence, but I would never use it as just a trading strategy. So if it aligns with like supply and demand zones, or some type of like deviation or whatever strategy, EMAs, RSIs, all this other stuff that you can use in confluence with your trade ideas, then you can use it. But I definitely wouldn't trade solely off of it. But essentially it's a Fibonacci where this sweet zone around the 78 to 71% level is a common retracement level. So you put in a local high, you retrace, and then you come back into this sweet spot, so to speak, and then continue down to the range low. And it doesn't happen a lot, but like I said, you definitely want to focus on confluences when you are trading that. You don't want to just be like, oh, it's in the golden zone, let's short. So yeah, just food for thought. But yeah, I still think overall that GBP USD is going to be headed lower, but I definitely would proceed tentatively, given that the UK is in a very precarious situation, and a single news event could lead to it spiking this way aggressively or this way aggressively. You never know, just because there's so much risk and uncertainty right now. It's not necessarily a technical play, it's all macro. So yeah, keep that in mind.
Yep.
All right, let's transition. What we got? GJ. Whoops. There we go. Okay, so this is the daily chart. Yeah, so all these crazy, oh my god, this wick is so wild. All right, so basically we have this range right here. Rough range that we're operating in, right? We get some deviations and reclaim, test the range high. Again, you can see these deviations right here. That on lower time frames, you could probably maybe get capture as soon as you see. Actually, I can tighten this a little bit right around there. Yeah, so whenever you see these deviations, always be on the lookout for shorting opportunities, because price loves to deviate from a range and then just hop right back in towards the range low. Now, this is a pretty aggressive one. Again, this is just because we have a lot of macro influences. I think this had to do with, how long ago was this? Oh yeah, this is the UK thing, obviously, because we're dealing with the pound. So this is when, you know, that pension nonsense really hit the news cycle. So definitely take this with a grain of salt in terms of just the extent of the deviation, because it's kind of like a liquidation cascade, I would assume. But yeah, so we're in this range, right? We're headed towards the range high. We are roughly there. So again, what I would be looking out for is some sort of deviation, right? So we maybe get a candle or a wick or even a candle close above. Then you want to wait for a candle, like a red candle, close below. Maybe wait for one more confirmation candle, and then look for some sort of wick to get you down into here. Or you could just market it, you know, it really depends. The confirmation is always the safest trade. You're going to have way less losers, but you're also going to have way less winners. Usually my approach, I like to err on the side of caution. But yeah, right now, I would be looking for that deviation play, just because that is where we are right now. I suppose you could go down. Let me see. Drawings look so silly when on the lower time frame. Yeah, so we don't really have any clear, I guess you could say, this area potentially of supply, although it's not aggressive, because you can see that this right here is kind of, it was like a trickle down. It wasn't really an impulse, so it was kind of like the market slowly lost steam. So for that reason, I wouldn't really view this as a super reliable area of supply, even though we could definitely just drop from here. But I would be, my base case would be looking for that deviation. So basically bust above, at the very least, this high, grab liquidity with some sort of wick, and then maybe have the candle close. Ideally, that would probably be the best. You have the wick and then a candle close below the range, and then you just wait for one more retest of this with your stop right here. Here, let me clean some of this up. Yeah, so basically, let me get the order in, make it a little bit more clear. Play the range low or the midpoint. Again, targets, both are targets to keep in mind. But basically, if you see some sort of wick above and then the candle closes below the range, I would have the stop, like maybe right where that high is, entry right around the range. You could have a little higher, who knows. And then just trying to get one more retest of that level after the deviation before heading back to the midpoint or the range low. All right, I think that's good, right? Let's transition. Yeah, most of these pairs I'm just doing in real time because I don't trade all these markets, but I am here to help people. Okay, so yeah, what is this? So Gbp Swiss Franc. Now, like all these pound pairs, we have how long ago? Oh yeah, we're on the hourly chart. So this was the big capitulation with the UK thing. And again, that when stuff like that happens, that definitely can be a sign that the market is bottoming. And so we're seeing this pretty aggressive rally. So I don't know if I would necessarily fight that. I would be looking for, basically the attitude maybe is just buy the dips, right? Everybody loves that.
My man!
But let's map this out. So we had this low and we went to this high, and we have this low and we made a new higher high. So I suppose you could be looking for some sort of retracement into this area of demand. So something, a little trickle down anywhere in this area, and then a continuation to make a new high. That's definitely possible. I don't like how high this low is. Definitely possible that we do. This does act at the low, and we just bounce from here to make a new higher high. But I wouldn't be surprised, especially because this high wasn't that much higher than this one. I wouldn't be surprised if we retrace down into this area right here. Possibly, I guess you could play off of this actual low. I don't know if it would get that far down, but dip back into this and then continue, or even be range bound. But on a shorter time frame, I still would be eyeing these levels, maybe even this really small level right here. Maybe even include that. So basically some sort of retracement back into this level to target a higher high. And what I would love to see to really convince me of taking this is a build up of liquidity. So we have this low right here, right? Now we're gonna, so I call this a liquidity line. Let me get rid of some of this nonsense, make it look a little cleaner. So the liquidity line is basically just relatively equal levels that build up liquidity. And so that would look like, say we have a retracement here and we go down here, we build up liquidity by testing that area and holding it one more time. And then we do it again even. I love to see it happen 3 times because that's a real sign that liquidity is being built up. But 2, I suppose, can be enough, just depending on the context. So say we build it up like that several times, and then we just come crashing down into this area right here, where we shoot off to make that new higher high. So I would love to see that. That's how I would like that to play out. I don't necessarily just want to take buys off of this level right away just because it looks like an area of demand. I want to see liquidity built up around this imbalance right there. So we build up liquidity and then we run it to grab all this liquidity and fill this imbalance, and then dip into this area of demand to cash those extra orders and continue on to that higher high.
What?
That makes sense, right? All right, let's transition.
Woo!
What do we got? Usdjpy. Yeah, so this is a stupid one, honestly. I mean, I have to include it just because it's one of the biggest currencies, but it has been just a slow grind higher. Now, this was when the Bank of Japan decided they were going to intervene in the FX market to backstop the yen, and that's what led to this short-lived capitulation down to this demand area right here. We bounced pretty aggressively from it towards the range high, and ever since we've just been trickling higher, just this slow grind. Now, the tricky thing, I've said this multiple times, is USDJPY hasn't offered the best trading opportunities. It's just been like hold it and forget because it's going higher. It doesn't give you the best opportunities for pullbacks. So when you look at the chart, you're like, I can't buy now, but it just keeps grinding higher. Sometimes macro forces are stronger than than people give them credit for. So again, not really ideal trading opportunities. You could eye some random, demand zones like this, whatever it is. I guess if you were playing lower time frame, you could potentially be playing off of this levels. Oh, those wick I hate when that happens. A little wick fucked everybody. But yeah, I don't know. I'm not really interested in trading the USDJPY short term just because it is either no volatility or excessive volatility, which is not ideal because it just like whipsaws you out of a trade, or it's not really a trade. It's like this medium term investment. But yeah, so I think it's probably going to hit resistance at 150. It's a big psychological level, so I wouldn't be surprised if we see a sell-off around there. But longer term, as long as the Fed is tightening and the Bank of Japan is not, the yen is going to go higher. I mean, the Japanese have a huge amount of treasury reserves to sell to protect the exchange rate if they want to, but that doesn't last forever. And so I still think as long as the interest rate differential between the United States and Japan continues to widen, we're probably going to see the yen continue higher. Or yen continue lower. USD higher.
You're a fucking
You
idiot.
know what I mean. All right. Transitioning. USD Swiss Franc. And I know it's not franc. It's more fun saying that. Okay, so let's go to the daily chart. Now, this is, let me just talk about my macro babble for a little bit. So the Swiss franc is historically more of a safe haven currency, not more than the than the dollar, but still relative to a lot of other currencies, it's more of a safe haven currency, which in times of risk off and troubles and economic turmoil like we're experiencing today, that would generally lead it to getting more of a bid. Now, again, I think the US dollar is going to, even in relative terms, probably gain, but I don't think the risk to reward for the franc and US dollar is as good as other pairs. Just for that reason, the risk off kind of sentiment associated with the Swiss franc, and also that they have a lot of reserves to sell and defend their peg, and that would put downward pressure on other currencies. So maybe they have like euros and euro denominated assets like equities in Europe and all sorts of other currencies. They have a pretty large amount of excess FX reserves that they are willing to sell. I believe the Swiss bank talked about them selling their reserves when needed to defend the franc. So I wouldn't be surprised if we start seeing a rally in the medium term. Not in this, because this is USD, but like in Swiss franc pairs. So the franc rallying that relative to those ones. But what I'm seeing right now is kind of a deviation plane. We already saw it, right? So we have one wick right here, push above this high. Right? So kind of like a liquidity grab. Now you want to see how this develops, because that doesn't mean that we're going straight down towards the midpoint or lower. We could easily keep rallying from here, but I'd want to see some confirmation. So if this candle closes below this previous high, and maybe even one more candle closes below it with a wick above, because if you're just seeing candles close below with no real pressure, downward pressure from being above, like wicks, then it could be just building up and then leading to a push higher. So I would like to see some sort of evidence that like you have wicks here and candle closes below the line before I would be willing to do this retest of that high and then targeting the midpoint. Whoops, the stop is way too high. Can't even see it. Yeah, so something like that, but I would want to see confirmation again that we're seeing. Whoops, let me get these out of the way. So confirmation that we are seeing like this. So basically a wick there, but the candle close still below, and then another candle, maybe a similar thing, a wick there, but the close below. If I saw that, then I might be willing to take some sort of sell off of this level with the stop around there and targeting the midpoint. So what would that look like? Basically this order, but I'll base it off these candles a little bit better. So stop off of whatever the highest wick is. Once you get a couple confirmations, just base it off the highest wick. You can even give yourself a little bit of breathing room if your risk to reward allows you to. And I would target the midpoint. I don't know if there's going to be enough weakness in the dollar to warrant a retracement all the way down to here, because this is the daily chart, so that's a pretty aggressive fall. But maybe we see a move down to the midpoint here. But still, I also would be preparing for a bullish bias favoring the US dollar for reasons I've already discussed. So maybe some sort of push into this level, retracement, catch a bid, reclaim that high. And once we, like if we dipped, went above, like, you know, got that deviation, that meaningful deviation, dipped below into what looks like an area of demand right here, and then we pushed higher, reclaimed this high, settled above it, and maybe started pushing a little bit higher. Like as soon as we broke that after reestablishing, I might mark it in or just try to get some sort of bid in this general region for a continuation higher. But for the reasons I talked about the Swiss franc, I don't know if I really want to take this trade. I probably won't be, but you know, still food for thought. Those are the general ideas I'd be looking at.
Totally.
All right. What do we got? Last pair. That went fast.
Not crazy.
What do we got? Oh, actually, I think I'm gonna do gold at the very end. So second to last. Okay, so this is USD Cad. It's aggressive move higher, pretty clear uptrend, and it looks like we are continuing that. So we had, actually let's go down. I don't really like the daily chart that much. Yeah, so we had this basic range, right, and a bunch of deviations, and got these like flip-flop candles. Pretty aggressive. God, this is pretty unusual price action if you ask me. I mean, these giant, currencies have been so volatile lately. Yeah, I mean, honestly, just at first glance, I'm not really the biggest fan of this, but what am I seeing right now? I guess I'd be eyeing maybe some sort of retracement into this level. And see, go down. It's not really. These candles are aggressive. And I do like this level right here. So this is kind of like a zone shift, right? So we made this high, and we had a little bit of a drop off, a small retracement, or just this green candle, so small retracement, and then we had the real big impulse down. And now we have retraced up into this level basically, and we're starting to get some wicks here, which is a good sign. So I do like this as a potential short, actually. So something to the effect of this right here, and then a target to the nearest area of demand at the very least. Now we could be headed all the way lower to the midpoint. Actually, let me get back to the 4 hour, get this demand zone a little bit better, or maybe even the 1 hour. Yeah, this candle's annoyingly big, but yeah, so I don't really like this that much. I definitely won't be taking this because the risk reward doesn't seem good, but because if you're basing off of what looks like this, because this potentially could be the area of demand, maybe if we get down to the 15 minute, it'll be, yeah, pretty much the same. So this is kind of the area of imbalance I'd be looking for price to fill. So come back down to this level if we're going to remain bullish somewhere into this general region, and then a continuation higher. Doesn't mean we can't drop all the way lower, because that would be a lower high, right? So this is the high, we pull from this area, and then we go make a lower low. So could be worth it if you are targeting all the way down here. Definitely, actually, no, looks like a worthwhile trade, I suppose. Let me get a little bit higher again. Yeah, so right now that is looking like a potential good entry, just because basing off of that kind of zone shift, not making a higher high, and definitely possible because this is a very aggressive move, right? This candle, this huge candle. So I wouldn't be surprised if that is a short-term high that we have in for USD Cad. I've learned my lesson not to fight the USD wrecking ball though, so I always am hesitant to short dollar pairs, just because like even when the chart looks like it's clearly time for a reversal, it's like, oh well, you know, some shit happens, Chair Powell goes on, he's like, we're raising rates if it kills every American or whatever it is.
Yeah.
So it's not always in my interest, at least lately, to short the dollar, but that is what I'd be looking at. This does look like a reasonable trade. I'm not opposed to it, and I probably would just ultimately target this lower low right here, consistent with the midpoint too. But yeah, who knows? Stay tuned, because the dollar, it has a funny way of proving everybody wrong. Just keeps going higher. All right, well, let's wrap this up with gold before we get out of here. So as long as interest rates are rising and the dollar is rising, gold is probably going to struggle to catch a bid. I mean, when you think about it, if the dollar is rising, everything denominated in dollars is going to be getting less valuable, going down in price. So keep that in mind. As long as the dollar is edging higher, it's going to be a major headwind for gold. So if you think that the dollar is going to keep going up, if you think rates are going to keep going higher, then you probably want to be or remain bearish on gold. But I still think eventually we're going to get some sort of retracement. Gold's usually pretty good at sniffing out things earlier than other markets, so might see a reversal before a lot of these other markets, but who knows. Anyway, let's get back to the technicals. So we'll drop down. Actually, let's talk about this. So we got this area of supply that I would call supply, mostly because we have this imbalance right here, right? A big consolidation, impulse lower, left a little bit of an imbalance with that circle I drew. Now price is already retraced. Oh, and off that level. Whoops. Yeah. So we had this high. We made the lower high into this area of supply. Perfect. Here's our low. So if we are going to remain consistent with structure, we're going to probably make a lower low. Let me see if I can actually. There we go. Yeah. So some sort of lower low. Busting here, and then at some point probably see some sort of retracement into another area of supply, just like with this, before making another lower low, or just being range bound. But either way, we want to be identifying some sort of supply zone, because we are trying to ride the trend, right? So let's get down to the 1 hour chart. Ooh. Okay, so now I like this right here. Now generally I don't like to take sell trades in discount territory. So, you know, if you consider this the range, this area right here is in discount, so below the midpoint. And so generally I don't like to take sells at those levels, just because I like to sell in premium territory and buy in discount. But what I like about this is this was an area of demand. I mean, you had consolidation, a big push higher that led into that kind of higher time frame supply zone, and then we retraced, caught a bid in that demand, and now we broke lower. So my what I'm seeing right now is that this area of demand is now flipping supply. So I wouldn't be surprised. Whoa, why did that come there? So I wouldn't be surprised if I mean, we already kind of had this actually. So we dipped below, and then we came back in and now headed lower. So I suppose kind of missed the opportunity potentially. But like I said, because it's in discount, I probably wouldn't take it anyway. But whenever you see demand zones flip supply like this, especially with a consolidation, I always like to look for some sort of retracement into that level. And then let me get this. So you'd be, and I always like to shoot for like the midpoint of whatever that range is. So this, and then you play off the high. It's kind of annoyingly high, I suppose. And then just target the range low. right? And not really a good risk to reward. Again, partly because it's in discount. You're not starting from like up here, which would make the risk to reward much better. But that is kind of what already happened, but also just something in general that I like to look for when demand flips supply. You know, you catch this bid, you just break right below it, and then you come back in, retest it because you still have liquidity left in there, all those buy orders and maybe flip sell orders, and then you just continue down to the range low. But if we, you know, if gold is sniffing out a Fed pivot, which is, you know, more and more people are saying it's on the horizon, you want to be open to this right here being the low. And what that would mean is we got to look for some sort of area of demand where price would bounce off of. Let me see if I can actually go on a higher time frame. Yeah, so I guess I would just base it off of these, the series of sell candles, right, that led to the impulse. Now we already kind of filled the imbalance, right? We pushed higher and retraced into here, mostly filling this area. I guess, I mean, if you counted from this level, we fully filled it, you know, from the green wick, but I suppose you could say we didn't get all the way back into this region if you're counting it from the sell candles down. Or you could even play the very bottom end right there. So I always like to draw demand and supply zones within my demand and supply zones, just get like lower time frame, higher time frame confluence. So potentially be looking for longs off of that lower end supply right here. And if you think this is the start of a new trend, target that higher high, and this is going to be a really solid risk to reward. So again, invalidation off of the low because you're assuming we're going to make a higher low. Again, this is all kind of predicated on like a Fed pivot and gold sniffing it out and edging higher because it doesn't think the dollar or rates are going to continue presenting that headwind.
Yep.
All right, so maybe this level, and I still think it's here. Where are we at right now, actually? Yeah, so we're already nearing this potential area of demand if we were going to pivot. So I would just be eyeing price action in this whole area for now. And then once you see maybe a little reaction, drop down to like the 15-minute, 5-minute time frame to look for lower time frame demand zones where you can put an order in and tighten up your stop. Because if you find these lower time frames confluent with higher time frame demand zones, it makes it easier to keep the higher time frame take profit, but maintain a lower time frame stop loss, which obviously increases your risk to reward. So I would definitely be eyeing for that. Now this bottom zone would be ideal in terms of risk to reward, and it does look to be a pretty good demand zone. You could say we still have all this imbalance to fill, but I wouldn't be surprised if it's based off these sell candles, like I said. So really anything in this region, I would be eyeing for a potential reversal and continuation to a higher high. But at the same time, the Fed doesn't seem to be changing their tune despite all the signs and concerns. So I wouldn't be surprised if we just make that lower low, in which case I would just be looking for reclaiming of the previous low, and then looking for a slight retracement, whatever, kind of like this. Basically, you see the low and you wait for, actually, where was the previous low? Yeah, I guess this was kind of like an aggressive one. Yeah, I don't know, but still, either way, it holds that you would want to just wait for that deviation or this break below to a lower low, reclaiming the previous low, and then look for some sort of bounce to retrace into either, okay, I'm just gonna, this chart's too messy. There we go. And then potentially retracing into this area of supply, right? So that's if we break through to a lower low, right? So we go down here, make a lower low, right? Can't even see it because of this nonsense. Yeah, so we break a lower low somewhere, and then we come back up maybe into this area and continue the trend. So that is the trade potential ideas for both I guess a reversal and continuation of the trend. Okay, well, that is all I have for you today. I hope you enjoyed. I hope it helped. But as always, stay happy, humble, and in these crazy times, most importantly, solvent.
And we say bye-bye.